I'm changing teams, well, on interest rates, which way for stocks, and bloody Britain's Brexit. I'm Peter Switzer, and I'm mad about money. Yes, I have to admit I've decided to change teams on interest rates. Before I was a, let's stay on hold kind of guy, but the recent run of data has made me change my mind. I'm now in, come on, Dr. Phil, let's have an interest rate cut ASAP. Now, why? Well, look, there's still a lot of good data out there, and that's part of the reason why I want to change teams. You see, because we've got a good, strong jobs market. Unemployment's coming down, employment's going up, and job ads are still looking pretty good. Tourism's great, the trade numbers are fantastic, but we know house prices are really struggling. We also know that Bill Shorten, if and when he becomes Prime Minister, has some really what you wouldn't call positive policies for business, like negative gearing changes, the living wage, which might be great for consumers and wage earners when they receive it, but won't be great for business. So therefore, I'm thinking, let's try and get some momentum into the economy before Bill's policies start, spooking some key people in the Australian economy. So my idea is Dr. Phil Lowe, the Governor of the Reserve Bank, should do a preemptive interest rate cut to make sure that the good stuff in the economy is given the right oomph to push the economy into the second half of 2019. Once the election's out of the way, it pushes the economy into a position where it can grow stronger. At the moment, it's only growing around 2% if it's lucky. We need to be around 3 or 4 to keep unemployment coming down. So I'm prepared to admit that I was wrong on staying on hold, and I'm now moving to the let's cut interest rate camp, and I think I'm absolutely right in doing that. Now, what about the stock market? Am I worried about the stock market because of my concerns about the economy going too slowly? Probably not. I do think that if we get an interest rate cut, that will help the local stock market because it'll also push the dollar down. And when the dollar goes down, lots of stocks, companies that sell stuff overseas, they do really well. So that's going to be good for the stock market as well. But the external stuff I'm seeing overseas makes me reasonably positive about stocks going forward. We know China's got an economic problem, they're stimulating. We know the EU have an economic problem, they're stimulating. There's all stuff that came out last week in particular. We know, look, obviously, if Brexit is a pain in the neck development, the UK will have to stimulate as well, and the EU are already doing it. So even though Brexit is a real question mark problem, it would bring about stimulation of economies, and that would help stock markets going forward. Also, there's a guy called Percy Allen who's now connected to our business in a little website called Market Timing Australia. Percy is an expert on timing the market, and even though it's hard to time the market, I would have thought Percy would have been kind of negative on Australian stocks. He's actually given a green light for buying stocks at the moment in Australia, and he's a really careful kind of guy. Former Secretary Treasurer of the New South Wales Treasury. So head of New South Wales Treasury, to put it right. So Percy's a very cautious kind of guy, and for him to be positive on stocks is good. I then went to my charts guy, Mike Gable from Fairmont Equities. He also said, not really excited about stocks right now, but the overall trend looks really positive for stocks. And a lot of big US fund managers are starting to say exactly the same thing, that they believe that particularly when you think that Donald Trump could sign the trade agreement with China on March 27, which happens to be my birthday, which would be a great birthday present if he does it. All these things, on top of the fact that we know the Fed's not keen to raise interest rates anymore, all suggest that stocks can keep on trending higher. Now, finally, Britain's bloody Brexit. This is the craziest thing of all time. And the big problem with Brexit is it just breeds uncertainty. We do not know what's going to happen. One thing that really worried me, and probably worried a lot of Ferrari buyers in the UK last week, was Ferrari actually informed Ferrari buyers if Brexit goes ahead and it's a no deal Brexit, the price of Ferraris are going up by 10%. Now, I know probably there's only 100 people in the UK who will be crying tears of blood over that. But that's the kind of thing that wasn't expected. And if it happens with Ferrari, it's going to happen with lots of other products that the POMs sell to the Europeans and or buy from the Europeans, vice versa. So there's going to be a whole lot of uncertain issues, and that's what's really annoying about Brexit. The pound will go through the floor if there's a no-deal Brexit, which means going on holidays to the UK would be probably pretty good, because the Aussie dollar should do better compared to the pound. Throw all this in, you start saying to yourself, David Cameron, the former Prime Minister who thought voting on Brexit was a good idea, David is going to go down in history as one of the greatest dopes of all time. I'm Peter Switzer, and I'm mad about money.